After weeks of breaking records, gold and silver prices have pulled back sharply. And that has left many people wondering, is this a chance to buy or a warning sign to sell? Well, to understand what's happening, let's take a closer look. Over the past few months, gold and silver went on a remarkable run. Prices climbed almost every day. In India, gold moved close to 1.8 lakh rupees per 10 grams. Silver crossed 4.2 lakh rupees per kilogram. Globally, too, gold touched record levels, moving past the $5,000 per ounce mark. In commodities markets, such rallies rarely last forever. And last week, the market reminded everyone of that. After India's annual union budget yesterday, both metals saw extreme price swings. In fact, this was their sharpest single-day fall since 1980. Both gold and silver slipped as investors wondered if the recent gold rush had reached its peak. And even global prices cooled off. Spot gold fell about 7%, settling near $4,500 an ounce. And spot silver declined to $76 an ounce. So why did this happen? The biggest reason is something very simple. People started taking their profits. Many traders had bought gold and silver much earlier at lower prices. So when prices surged to record highs, they decided to cash out. But this does not look like a collapse. It's more like a correction. Think of it as a market catching its breath after a sprint.
The key question is whether this marks the start of a structural downturn in commodity prices or merely a correction. We see it as a correction and a buying opportunity rather than a fundamental shift.
Despite the cooling prices, the broader picture remains supportive. Governments are under fiscal pressure and geopolitical risks are high. And easy money policies have not completely disappeared. All of this still supports gold and silver in the long run. In India, the union budget did not change anything for precious metals. Import duties remain at around 6%. But speculation about possible changes added to the volatility. Well, now the focus shifts to what comes next, including the Indian central bank's policies, US jobs data, and the performance of the manufacturing industry. They will decide whether precious metal prices stabilize or swing further. Interestingly, buyers are already stepping in. Gold is finding support at around 1.59 lakh rupees. Silver is holding around 3.6. Support refers to a price level where buyers tend to step in. Prices of precious metals do not keep falling endlessly. At certain points, buyers start trading when they think the price is low enough. Well, this helps stop the crash, or at least slows it down. Well, that tells us that demand hasn't completely disappeared. Well, gold is often seen as stable and finite, but the last few sessions are a reminder that precious metals can fall as quickly as they rise, and that's the real story. Not panic, not euphoria, just a market reminding us perhaps that every rally, no matter how strong, eventually tests the nerves of those chasing it. Well, for more on this, we have with us Mitali Nikor, who's an economist and the founder of Nikor Associates, joining us live now from New Delhi. Welcome to the program. So how do you gauge the fortune of gold and silver right now? What are investors actually thinking, in your opinion?
No, absolutely, Carrie. I loved your report just now and such a balanced perspective. I fully agree with this. What we are seeing in the markets today, and I want to really differentiate between gold and silver. This is really critical because a lot of times we tend to club them and we tend to find reasons why gold and silver are moving differently. So I think let's talk about silver separately and gold separately. When we look at the silver demand, a massive set of silver demand comes from institutional and industrial buyers. We can see that industries such as semiconductor industries, electronics industries, artificial intelligence data centers, these are all big consumers of silver. And what we saw in the previous 2 quarters, Q2 and Q3 of 2025, we saw that, there was a little bit of a reduction in the supply side. Now the suppliers of silver have understood that this is not just a cyclical increase in demand. This industrial demand is here to stay, and there has been a shift in demand. And we saw the supply easing towards November, December of 2025. So quite clearly, the silver, is moving in that direction. On the other hand, when we look at gold, it's a slightly different story. We saw a lot of portfolio investors invest in gold. We saw a lot of central banks, increase their purchases of gold in 2025, given the situation with the geopolitical scenario, with the uncertainties in the global economy, and we saw that gold was seen as a safe haven, a safe asset, and every portfolio investor wanted a bit of gold, that little gold dust sprinkled on their portfolio. So really, I think from that perspective, again, we see that cycle adjusting, and we see, the fact that a lot of that portfolio balancing has actually taken place. So I think the reasons for both are quite different.
Okay, you touched on this a little bit there. How strong a factor do you think are world political events when it comes to investor sentiment?
No, I think that, this is one of the biggest drivers. The geopolitical scenario is really one of the biggest drivers for the fluctuation in gold and silver prices, but particularly gold prices, like we discussed just now. At the end of the day, when a president of a country can overturn the entire trading system, when the president of a country can come and literally take another sovereign president, to their country, take them away from their country, take over the oil operations in that country. I mean, we are looking at, in the words of Mark Carney, the rupture of a global economic and trading order. So, in such a scenario, of course, investors will rush to safety, and of course, investors will want, their portfolio to be hedged against such geopolitical risks.
You mentioned the central banks briefly a little bit earlier. I mean, what about individual countries then? How do governments decide their strategy when it comes to stockpiling gold, perhaps?
So I think, this is something that I was actually researching quite deeply last year. And what we found is that several countries, I mean, including India and even China, were big buyers. The central banks of these countries were actually bigger buyers of gold than even, banks and institutional investors. So we actually saw, huge increase in the stocks of gold in these countries. And there are certain national benchmarks that these countries have started putting. So we find that India, for example, puts a benchmark that at least 12% of the money supply in circulation should be backed by physical gold. Similarly, China has different benchmarks, other countries have different benchmarks. So each country has its own national benchmark, but we typically find that at least 10 to 20% of the money supply in circulation is being backed by physical gold for most countries.
Mitali Nikor, we appreciate your insights. Thanks very much indeed for joining us.
Thank you.
The world doesn't fit in boxes, so why should your news? From battlefields to negotiation tables, from internet outrage to real-world injustice. The conversations everyone is having and the ones they're avoiding. It's the same show, but this new year, Firstpost America gets a new look. I'm Kerry Johnston, and this is Firstpost America.